Hi, my name is Pete Hahn, and thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of video tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Hi guys, welcome to today's video. In this video, I'm going to show you a few little tricks about trading options on Thinkorswim's platform. And these are tricks that I noticed almost immediately when I began using Thinkorswim, but I don't want to assume that everyone else has seen it as well. What I'm going to show you is how you can tell approximately at what price an option is going to trade given a certain price in the underlying. I'll give you some examples here. We'll go to charts, and I'll open up a few panes and we'll plop in a few symbols here. We'll do SPY. We're just going to do the indexes here. Okay, so while setting up those charts, let me go ahead and fill you in on some of the details that I didn't cover when I did the original recording. So all of this is based upon what you would call theoretical price. Now there's a custom column in the trade tab that Thinkorswim provides. It's called Theo price, and really it's essentially just the mid between the bid and the ask. It's really the midpoint is what it is. But technically there is a way to calculate the theoretical price of an option given a change in the price of the underlying. So let's say for instance you've got several things that factor into the price of an option. You've got the delta, you've got the theta, the time component, you've got implied volatility. I'm not going to go into the rest, but those are the primary drivers for calculating the price of the option as the price of the underlying varies. Okay, so let me give you a little context here. Why would we want to be able to understand what the price of the option would be given the price of the underlying? Well, let's say you didn't want to use a market order because you didn't want to take a chance on getting filled at any price that the market makers decided was good enough for them. You want a limit price so that you have a price that's good for you. So we want to use a limit price here, let's say, and we want to maybe, let's say we'll do some moving averages on a chart and a pullback to a key moving average. So for instance, on this chart I have several moving averages. Let's take the white one. That's the 21 exponential moving average. This is a daily chart. So let's say we'll zoom in right here at the end right here. So let's say we had a goal that we wanted to trade SPY when it traded down to the 21 period exponential moving average, expecting that we'd find support there and that we'd get a little bounce that we could possibly profit from. Okay, so as you notice, I've got the mouse cursor here on that line, and it's at let's just call it 215. So the method I'm going to demonstrate here in the next section of the video is exactly how you can determine on that day what the price of a given call option on SPY would be trading at when the price touches that line. Okay, and you know there's a little give and take. It's theoretical price, so as implied volatility changes and the day wears on, depending on where your expiration is, if you're dealing with a weekly expiration, your time is a big factor, bigger than it would be if you're dealing with a monthly expiration. So you know, keep all that in mind when I'm getting ready to show you the next section of the video here is how to put this into practice. Okay, so stay tuned. Okay, so what I'm going to show you now is for each one of these charts that I've got in the grid here, we've got 15-minute charts. I want to show you what it would be like. Let's say we wanted to buy a call if the price of SPY dropped to about 215. How would you know what the value of that underlying option is going to be when you got to, I'm sorry, let's move that chart to the right here. Okay, didn't notice that. Sorry about that, guys. I'm doing this very quickly here as the market's coming to a close. Ran out of time today, but okay, so let's say, yeah, we're ready here at 215. So let's say we wanted to buy a call at the lows. Okay, so you go to the trade tab and you put in your symbol. I put in SPY, and let's work with the current expiration weeklies here. Okay, and let's say you wanted to buy the at the money at let's say you wanted to buy the 215 when it got to 215. All right, So we'll go ahead and hit the ask there, and that will open up an order. Now, what I want to show you right here is this expected SPY price. Okay, so it's telling you right now that at the current price of this call, $1.34, that it's expecting SPY to be 215.85. Now, this goes along the lines of theoretical pricing. So theoretical price factors in the implied volatility, the time element, basically all those Greeks, gamma, theta, delta. And so what you end up with is a theoretical price at that level. So let's say we wanted to reduce the price of the call here. Let's bring it down to a full dollar, okay? And then what does that do to the expected SPY price? It brings it down to 215.33. Okay, what happens if we drop it further? Let's say we'll put it down to 0.80. Okay, so now we're at 215 exactly. So I've lowered the price of the option, the 215 call, down to 80 cents, and now the expected SPY price is 215. Now watch what happens when I hit confirm and send. Now I'm on paper money here, so I'm not worried about losing money on this. Look at this. The order for that option shows up right at that level, 215. So let's go ahead and look at Qs. Let's say we wanted to buy a put if Qs went to 119.04. So go to Trade tab, we'll punch in triple Q, we'll go to the current weekly expiration, and let's say we wanted to buy the 119. We're probably going to need to open up the strikes here a little bit. Okay, so let's say we wanted to buy the 120. We don't want to sell, we want to buy. We want to buy the 120 when it gets to 119. So we'll decrease the price of the put and see if we can get there. So I got it down to $1.10. That's pretty close. Let's drop it maybe a few more pennies. Okay, let's see. There we go. So we're pretty close to the 119 here. Let's see, buck. Okay, good. So now we'll hit confirm and send, and then let's go to our charts. Okay, so there you have it. So I was able to dial in the level of the underlying, let's say Q. I was able to dial in the level at which I want to trade that option by using that tool in Thinkorswim. I'll show you one more time here. Let's look at diamonds. So let's say with diamonds we want to do, let's say we want to buy a call if it drops to 181.80, somewhere in that area, 181.80. So we'll go ahead and punch that in there, DIA. We'll grab the, all right, so we're already there. We want to buy the call, the 181, we'll buy it. And then let's see if we can get that down to 181.80. So let's do 75. Let's just experiment here with a few prices here. Okay, 181.81, that's pretty close. So hit confirm and send. Now let's go look at our charts, and sure enough, look at that. So now keep in mind that this is a theoretical price, and the theoretical price is going to vary. So right now you've got the SPY to enter at about 215, the Q to enter at about $1.19. You've got diamonds to enter at about $1.81.88 or so. However, when the market starts to move, implied volatility changes. As the day wears on, your theta will change, and as you approach the strike price at the underlying, then also your delta changes a little bit. So this is a moving target, but at least it gives you a good ballpark. If you want to trade a specific level on an underlying, you can dial in the price of that option and get reasonably close. And then as your price gets within range, you can just move it around, give it a little wiggle using the technique that I showed you in a previous video on how to trade options on the trading dome or the trading matrix, depending on what platform you're used to using. Okay guys, that's all I've got for you today. I really hope this helps you guys. I hope that I really surprised some people. I just take it for granted. This is how I've always used Thinkorswim. But hopefully somebody's eyes have been opened up and they say, wow. I hope there's some wow moments out there. Thanks a lot guys. Take care. Thank you for watching this tutorial video. Be sure to visit www.hahn-tech.com for the full library of tutorials. I hope this video increases your knowledge and helps you become more efficient with this topic, whether for home or work. Please support this channel by sharing these videos with your friends and colleagues. Thanks, and take care.